And good afternoon. This is Dan with your weekly review and outlook, episode number 8 here, brought to you by the Derivative Technical Analysis Program here at Van On and Company. We are seeing quite the interesting week here as we come into this Thursday and kind of wrap up Thursday, finish out the week into Friday tomorrow. Quite a few events happening this week, quite a few different markets giving some decent volatile type of structure to the downside and to the top side. So we want to get into that here and really take our progression of markets and kind of look at those markets from a broad perspective, and then kind of drill it down to more of a shorter time frame perspective to really see if we can execute in. Before we get into that here, I want to start with just saying past performance is not indicative of future results. Futures and options trading involves risk of loss and is not suitable for all producers and or investors, and this is a solicitation. Just giving a quick look here at our outline for today. As always, we'll go through that economic calendar first here. Then we'll head into our quick sheet. We do have a couple more changes taking place in our quick sheet that we'll kind of describe to you here, as well as a little sneak preview of our website that we're building out, or an addition to our current website that will be specific to individual clients and subscribers to the investment program or to our derivative technical analysis program that will kind of give you, again, a sneak peek towards. Then we want to go through our progression of markets. Like I said, I want to talk about the Russell 2000 here today, as well as the soybean market. Then we'll head into the live cattle market, natural gas, and then finish up with copper here. And with that here, we will go right into our economic calendar, which first we will kind of discuss this in terms of our website. So this is, again, just a quick sneak preview of our page here, of our web page that you'll be able to eventually have access to here. We're working through that on the side here, but as you'll see, you'll be able to access some of our videos, the live trade archives, weekly review archives. You'll be able to access the quick sheet whenever you please through this website. But again, just want to come down to this economic calendar section here. And really, I want to just zoom in, see if I can zoom in here for you guys. Actually, there we go. Zoom out a little bit there. So really what this economic calendar, we can start using this. It's filtered for just really Canadian markets, European markets, Chinese markets, and then of course our American United States type of markets here domestically. So when we look to, kind of tomorrow here, I think the biggest thing coming into tomorrow is just the Fed speak that's coming in here. You'll see a bunch of Fed speakers coming in right away in the morning, and that's what a lot of the financial markets will be tuned into across the board, and that will likely set the tone to finish out the week, to be quite honest. You'll see more kind of bigger movements, possibly like we saw yesterday in financial side. Indices like the NASDAQ, the Russell 2, the Dow. You also see movement in the Treasury bond market, interest rate market. So a lot of those bigger contracted markets, you want to be paying attention to those and kind of seeing what's going on there. As we get out into the next week here, as I just apply this different filter, coming into the next week here, Monday is a pretty light day. We get into Tuesday here. Really the big one there for us is the consumer confidence for September. That number will be out here in that Tuesday morning, September 28th. Coming into Wednesday, obviously crude oil inventories and really pending home sales that morning that we'll be looking at from more of a domestic perspective. Later that evening, you'll have manufacturing PMI and non-manufacturing PMI coming in from the Chinese markets. Thursday of next week, you'll have a pretty quiet day. You will have, of course, unemployment and GDP right away in the morning. Those will certainly act as some catalyst type events here to wrap up the month of September. But overall, pretty quiet day there for the remainder of the day on Thursday. And then Friday, first day of October, you do have the China national holiday that day. And then a few other different reports coming in, more manufacturing numbers, core PCI, CPI for Europe there. So pretty light, compared to this week. I would say it's a pretty light week coming in next week. You have end of the month and end of September here coming into October. So you may have some window dressing kind of put on some of these markets as bigger funds kind of position for really the last quarter here, Q4, October, November, and December of 2021. Next up here, we'll run through the quick sheet quickly here. No new trade ideas this week for you in terms of recommended executions. Posture ideas, however, are changing quite frequently. We still have a few contracts that we need to update, and once they're updated or changed, I should say, then we'll be changing the date and adding the date in here. But you'll notice a couple dates are starting to filter in here as we change those respectively. You also notice we changed a few things up just in terms of the table legend and references section here. So just kind of pay attention to that. A lot of this was higher up on the spreadsheet. Now it's down low here to really kind of be a little bit more just organized and more clearly to understand. Also this yellow highlighted section, just to understand that if a section is highlighted yellow, that either means a contract roll is taking place, position adjustment has taken place, or a posture level adjustment was taking place for that day. So again, if you see that yellow highlight, that is what that is in reference to. Everything else is obviously also referenced in that legend there for you. So again, if you have questions on the quick sheet, don't be afraid to ask us. A lot of information here, a lot of good information from our perspective here. This is what a lot of us use here. This is what right away in the morning when we come in, see where these markets are at, see where they're coming in relative to the VPOC, the reference points, downside and upside, and then obviously relative to our posture idea. It's pretty. It gives you a quick summary, which is really the goal of this quick sheet for you. Getting into the markets here for you today. First market that we wanted to touch on here was this Russell 2000. Russell 2000 doing a very good job holding firm here, sticking to this consolidated pattern that we've been stuck in here for many months now. The sideways consolidation pattern. Downside reference 1 here. 2110 on this level here. This is really the bottom end of this bigger volume node that's building out. Center of that volume node kind of sits right around that 2230 to 2240 zone. When we get down to the daily chart, you'll get a little bit better perspective of that. But so far, we're looking at this, and continue to look at this as more of a bullish type of consolidation, where at some point in time, we don't know when, but at some point in time, we do believe that we will rotate out of this and head higher towards these higher price counts. First price count that we're really looking at here, 423.6 at that, just under that 2400 zone on that contract here. So be attentive to that. We are seeing a nice week coming in here. You had a test lower. This August low that brought on some nice reversal. A test, really not really testing the top side of this, but getting back through the middle of the range. You bring this thing back through the middle of the range yet again. From this perspective, you give a higher low here, and now we're putting on a reversal from a weekly perspective that we're really going to be paying attention to coming into tomorrow. So that'll be a big clue for us. Also notice the weekly volume coming in. We're seeing already more weekly volume than we've seen really throughout much of the summer. So, if this is all of a sudden the weekly candle that starts to activate this contract, we want to be paying attention to that, and that's what our goal is from this weekly perspective, is to look at that contextually and say, hey, something is changing here. What is changing, and how can we react to that from that contextual standpoint? Bringing it down to that daily perspective now. You'll see again, just the build out of consolidation, you'll see really the biggest thing I want to point out is this test lower here off the 200-day EMA. It brought on a pretty aggressive buying for a few weeks. Didn't quite, obviously, didn't quite test those highs that we mentioned previously. Came back through this middle VPOC here, so just continuing to kind of center around this VPOC as we trade in and around it. The nice thing I like about this is that they had every opportunity, and when I say they, the sellers had every opportunity to really go challenge that 200-day and even at the lower end of the range. But they actually made, as of right now, a higher low coming in here. So this is good to see for the Russell 2000, a higher low relative to this low here. Now we can start to piece this together and say, hey, now if we can take this out, a higher high would likely put us, of course, testing those highs up around 2362, but then obviously trying to test this 423.6 count here right around that 2400 zone. So we'll see how this occurs here. We'll see if it occurs at all. I think that's really the biggest thing we're coming into is number one, see how this weekly candle closes. If that closes well, that gives us some ammunition to come in for the next few weeks to say we do expect higher prices off of this VPOC. The daily perspective as well, just coming in and saying, hey, we have the VPOC still centering this market. A confirmation of higher highs would be very good from a contextual standpoint. And right now we have those higher lows coming in. So if that is enough for you to put on risk, feel free to let us know. For right now, we're just coming in and seeing how tomorrow closes out. If we get a test of the VPOC, if we get a better opportunity to get a better entry, for a risk perspective, that's really what we're going to be watching there. But positive things happening here in this Russell 2000 market from our perspective, and certainly looking a lot better. After the last 2 weeks or last couple weeks coming in, buyers stepped in where they had to, how they had to from an aggressive perspective. And again, pretty excited to see how this one, we don't want to get emotional about things, but this is a very interesting technical setup going on here that has the possibility to bring in some decent potential for guys here. So, we want to be on this one, and we want to be trying to read this one, pretty, correctly at the end of the day. Next chart we'll run through here is that grain market, and we'll be doing the soybean contract. I'm going to run through the weekly shot here first. Again, you'll see us focusing heavily around this VPOC here. That VPOC is 1331.5 off that weekly chart. I think the positive here to look at from this weekly perspective is that this bottom zone, where this highlight is situated, has continued to hold in here throughout the summer, throughout the spring months, spring, summer, and now we're into the fall time frame, and we're seeing tests lower, and we're seeing buyers defend. Now it's a matter of, can we get that follow through back through the VPOC and possibly go test the higher end of this zone? That's going to be the big question here. I think from a risk reward perspective, if you want to be long on something that's not confirmed yet, but you're in the good risk reward zone, and you're seeing that support hold in here. Again, not seeing crazy reversal characteristics, but you're seeing good risk reward on a level that we believe should hold. And if it doesn't, that's information. But if it does, that's also information here. So you have good risk reward here off of these lows to try and get yourself postured or situated toward rotations higher into the zone, or even to the middle of the zone where the VPOC is, another 45 to 50 cents higher here. So take that with a certain perspective there. I think, obviously, if you break this zone, and again, this zone, I mean, we've been talking about this for quite a while here now, 1240 to 1260, 1250, even if you want to get in a 10-cent range. But if you break that zone, and really if you break 1240, your next area that we really think you could get down to is that in this purple here would be the 63-week EMA. That currently sits down around 1201, 1202. And then below that, you'd be talking really this low of this candle here, which is 1184. So that's kind of, again, if you break that, that's kind of our immediate target to where, we believe we could go to that downside. If we continue to hold in here, rotations again back towards the VPOC and testing the higher end of this range, $13.50 to $14 is certainly in the cards. But first things first, we got to get above that VPOC. Bring it into a daily perspective here. Again, you'll see just that consolidation type of characteristic coming in here. Nice bounce off the 200-day EMA here 3 days ago. There's no crazy reversal characteristics going on here, and that's why we say, hey, a level is a level. If you want to be a price type of activation individual, you're really just playing off of price levels. The more transparency we have at those price levels, so the more times we either get accepted or denied at a price level, we can have more confidence coming in to say, hey, let's execute on that price level. Other times it's going to be, hey, we want to wait for confirmation of reversal, and we might be waiting and waiting and waiting for that until it confirms a reversal, and we'll see if that does occur here. But point being is risk reward to the long side here. You're sitting here saying, hey, if I can risk 1240 to the lows to see rotations higher towards that VPOC, that's really that risk reward advantage by activating or by executing on a price level without seeing confirmation. And that's really what we're seeing right now. If you're waiting for confirmation, you're still waiting. That's really the simple form of this. Good to see RSI holding here. You're not seeing that really big push in momentum to the downside. That's a big positive here, and a way to really judge this market in terms of, do you really want to be pushing the downside and really trying to get everything out of that downside? You're seeing buyers continue to step in here, a la the support that we're seeing. So, pushing that short side, at least until it proves that we break through that level, certainly doesn't, shorts aren't getting paid is basically kind of the biggest thing right now. If you're trying to short into this market, you're not getting paid. You're continuing to see this thing bounce. You bounce here, you bounce here, you bounce here. Again, depending on the time frame, those shorts are not getting paid if you're trying to break that 1240 area. You break that 1240 area, now you're probably talking they're getting paid, and the longs are going to be on notice. So very important inflection point nonetheless overall for that soybean market. We'll jump into the December live cattle market here now. I'll run out to the weekly chart here. We've talked about this a couple times. Last week we talked about hogs. I believe it was hogs, if I'm not mistaken. But we're kind of alternating hogs and live cattle, throw in feeders every now and again. But again, kind of wrapping back around from our previous weeks talking about live cattle, you had the shut off come in here on this weekly candle. You had the push and the drive down lower to really settle this thing in where we consolidated previously for a couple months here back in the springtime, and now we're sitting here and consolidating again. And where are we consolidating around? Well, the most traded price currently on the chart is that VPOC, right around that 127.70 area on that weekly chart. And so that's really where we think this magnet is going to stick. Of course, there's an opportunity for it to trade lower here, an opportunity to go test this lower purple EMA. That's a 63-day EMA, and that's trading down around right now the lower 124s. I don't think it's out of the question that we could see a test of that, but I think again, for that to really gain momentum, you're gonna have to see some aggressive selling go on, to really push that thing. We believe that VPOC is going to keep this thing, pretty magnetized towards, price magnetized towards this VPOC at that 127.70 level from what we mentioned here on that weekly chart. Daily perspective here, again, just kind of pointing out the lower end of this range that we've seen here coming in. You can kind of see from the volume profile that you start to get a little bit more thin as we go down the ladder, and that's really why pushing shorts at this juncture. Yeah, you could push a short from here down to here, but just know that's the expectation of saying, hey, if we get down here, we're probably going to be more looking at it as a buy opportunity to rotate back higher. If we sit and consolidate here around the VPOC, we would look at that as more of a bullish perspective, and we'd be really just waiting for some reversal type characteristics to try and get long, or we'd be looking for the willingness for for a level to really show that it wants to hold, and that we can use that price risk perspective rather than confirmation risk to put us into a position there. Again, though, that VPOC on the daily chart here, looking at around that 128.70 zone. So again, 200-day EMA sits at 127.13. The VPOC sits at 128.47.5. So that's kind of our home right now in our perspective. If we continue to rotate around that, we believe that we can eventually work out of this and possibly go test the higher end of this range here. But really, this is our home for the time being. For a few, probably, if I had to take a bet, or I guess I would say for the next few weeks to a couple months here, I believe this is our home now that we can really identify and trade around. So keep that in your contextual expectations and just kind of understand how that works with what kind of trades you're putting on as well. Next chart we'll run through here, wrap back around on the natural gas market here. Natural gas having a good day today, having a rough previous 5 days, at least as of the time being. What I think this does is you have enough shut off now to really just set this thing down and settle this thing down a little bit. Shorts, they got paid for 5 days in a row, starting to lift there. If we come back below today's low, now that really opens up the door to go trade that 63-day EMA in that purple zone here. And I'm showing the daily chart right now. I'll bring it back out to the weekly. Normally I do weekly first and then daily, but I want to show the daily chart here first, because that's really where the action's at right now. I mean, that's where you're seeing big enough moves where you can start to be active in this thing to really either side, but more or less understanding that we could be in more of a build out type of range now with this market. So notice how you've gotten pretty thin in this profile, the volume profile from the VPOC down here, and then building all the way up, it's very thin. However, now you have the first shut off move, push down lower, you shut that off. Now here with today's move, you have the bottom end of the range now established here. So you can start to express risk to the top side if you want, risking that lower end of the zone, or you can wait to see if we get a test of this higher end of the zone and rotate it back lower. But either way, I do believe you're in more of a build out phase now, and honestly, any test higher above the recent highs, so above 565, pushing longs up there, in my opinion, is very risky. If you do that very quickly over the next week or so, you start to have, number one, momentum issues, and number two, you're just playing with fire as far as that goes in terms of buying a breakout. Yes, you're uptrending, I understand that, but you do have enough here to where that is a decent shut off. In my opinion, I'd rather see it, if I'm going to push longs here, I would rather see it consolidate for a little bit. Really much like what it did here. It consolidated for a couple weeks here. It stayed pretty healthy in here. Let that momentum digest and come into a zone, and then it pushed again. That's what I would like to see, coming in with this current market situation. If we come in here next week, 2-3 days from now, and we're already challenging the top side of this range, it's going to be very hard pressed for me to continue pushing the longs. I'm actually going to be looking for shorts to rotate back lower, and now we have a pretty decent trade set up from a risk reward perspective and from a context perspective, given the momentum and just price going on here. Coming back out to kind of more of that broad weekly view, again, you'll notice this is why you're kind of playing with fire, is because you have, number one, this weekly excess coming in here last week, and then you have bigger shut off coming in from that 2014 late 2013 or early 2014, around that 650 zone. quite frankly, you know, if you're looking to start thinking about maybe selling some premium, some option premium in here, probably not a bad idea because you have some defense mechanisms now to go against this for natural gas. And really, again, you can win 2 out of 3 ways with those sold option. In this instance, more of that sold call situation. You can trade sideways or you can trade down. Obviously, both of those situations would allow you to milk that premium out. Trading to the top side and taking your strike price out would then bring on risk to that top side. So just be aware of that going forward. But again, just the weekly perspective here, you're getting the lofty prices. You know, trend is very strong. I'm not arguing that, but you're starting to see some cracks in the armor here. You're starting to see reasonings as to why, you know, if you're a holder and if you're a long throughout this whole process higher, you're more than likely taking some profit. And the reason why I can say that with some certainty of confidence is because your volume profile gets thinner and thinner and thinner and thinner until we're all the way up here, and there's hardly any profile. So the volume in terms of an auction perspective, I mean, nobody wants to transact up here. Nobody, at least for the time being, is wanting to transact up here. It either has to build out through time, okay, or we have to come back down into price to really build this volume profile out. And that's the perspective of that risk that we can kind of curtail into, you know, starting to execute on that risk with that and say, hey, it's getting very thin up here. If I'm really trying to push longs, I'm really playing with fire. So maybe the better probability here is to look for better short opportunities or sold option call type option plays there. Very interesting chart as well. If you have questions on that, you know, do feel free to reach out to us. I'd be more than willing to continue walking through that with you. Last chart we'll get you through here is the copper market. With copper, very similar look to it as the Russell 2000, and at least from the beginning stages of what the Russell 2000 did. Notice how you have this big drive that we've talked about a few different times now when we've gone over copper. But again, you're really starting to build out this sideways consolidation in the copper market. If you remember back to the Russell 2000, you know, this is a very similar pattern. Just this is the beginning stages where the Russell has been doing this now for probably 7 to 8 months, where copper has been doing it for maybe 3 to 4 months here. So that's really the difference there. We continue to believe, just contextually, that we'll continue to chop sideways in this copper market. So what that means for you is, given this range, we want to be buying, you know, off of the downside references. We want to be buying on those and rotating back higher. And then conversely, the upside references, we want to be selling those. You know, if you have longs, we want to be selling up there. And then if you want to be looking more short, you know, look for shorts up there in those upside references, rotating it back down lower, you know, towards the middle of the zone or towards the bottom end of the zone. And then all of a sudden, you know, if this works out like the Russell does, all of a sudden you start rotating this market a couple times and you have a nice consolidated market that's still bullish for the long-term trend of this copper market. But in the meantime, really what it's doing is just it's digesting this bigger move that took place in 2020 and the early part of 2021. And that's very healthy. It needs to build out this volume profile that we're looking at here. Again, if you remember back to what I just said with natural gas, how do we correct through time or through price? What the copper market is doing right now is correcting through time from this given range, and as it builds that time out, it's going to build out more profile in here, and that auction is going to continue to build those prices out, and that's going to be healthy for the underlying market in this copper market. Bringing that down to that daily view now. Again, you'll see the VPOC on that daily perspective move to just under 427 here. Having some issues. They are having some issues with that 427 level. You can see some selling now coming in the last couple days here. But again, they're buying up that 200-day. We have not had a close below that 200-day. We've had 2 tests of that 200-day EMA. We have not gone overdone here or a measure below 30 on RSI, so that's another good positive thing to see here from this trend perspective. So all of those things really start to just kind of gel into saying, hey, if we get tests of the lower end of the range, we want to be rotating it back higher. You can start to point out bigger high volume nodes here to the bottom and the top side. Again, top side, that 450 zone, if you're long from down here and we trade 450 over the next couple weeks, might be an opportunity to say, hey, I want to take my profits and let's see this thing out. Maybe we rotate back lower, and now we have some more ammunition for that, to run copper again or to run another trade. But that's just a thought process through there in terms of how to trade the consolidation in a market such as copper, and kind of taking some cues from a few other markets like the Russell 2000 in that perspective. Again, as always, if you have questions, do not hesitate to reach out to us here at Van On and Company. As always, more than willing to speak with you on any market that you have questions on. From a technical approach, you really try to stress your risk and the opportunity, and just really letting the market dictate whether or not that will be successful or not. We have certain characteristics we want to be looking for in these markets. We have certain levels that we want to be looking for, and then it's really up to the market to decide whether or not our analysis, our execution is correct at that point. So again, thank you for listening here today on this Thursday, September 23rd. I will close with a disclaimer. Past performance is not indicative of future results. Futures and options trading involves risk of loss and is not suitable for all producers and/or investors. This is a solicitation. Have a great afternoon, and if I don't talk with you here tomorrow, have a great weekend as well. Thank you.